I want to thank you all for joining us. We're doing a special recording today dealing with the situation or the war with Russia and Ukraine. And Sarah, you've done a lot of research on what's going on. Why don't you kind of fill people in on what's happening right now?
Sure. To start, this is really an ahistoric situation insofar as we have never seen some sort of invasion of this scale since the dawn of the internet and the highly connected sort of global economy that we are now living in. And as a result, I mean, we are seeing record sanctions put on Russia from both the US and EU nations, which have really put Putin at a huge disadvantage. I mean, he has this huge war chest of funds sitting, but now the ruble has really lost its over 25% of its value just over this past weekend. So he's really at a disadvantage, and I think part of that is because there's so much global attention. I mean, never before have we been able to see images of war directly from someone's cell phone or directly on TikTok or Facebook or what have you.
Right. So one of the things we're seeing is a lot of European countries are doing the sanctions, and of course that's difficult because of the dependence on the natural gas that Russia sells them. For example, Germany, 60% of their natural gas or energy comes from Russia, 30% from Italy. So with that said, both those countries are starting to step up and go against it.
You see even companies like Exxon saying we're going to step away from this oil deal that we had with a Russian company.
I believe also BP said the same thing. So right, so we're seeing it both, on the with companies and countries stepping up and really putting a lot of pressure on Russia with what's happening. In addition, the home front is a problem for Russia. The Russian people are very much against seeing Russian bodies come back from the war, and then also the very wealthy would rather live in London or Paris and not so much in Russia. So they're kind of stuck in Russia right now with what he's doing, and they've lost a lot of value. The Russian wealthy have lost value.
Absolutely. And I mean, it's concerning, but it's also one thing to consider is the companies that we are investing in really aren't dependent on Russia or the Russian economy. The Russian economy is actually very small. It's smaller than the state of Texas, their GDP.
Both GDP and I think they're smaller than Italy, aren't they? As far as you don't realize how small of an economy is. The other thing is the population of Russia is aging badly, and so what we're seeing is there's a possibility that they may not be able to recover because they don't have the birth rate. Their population is too old. So that's going to be an ongoing problem for Russia economically and that kind of stuff. So really, the next thing is what should we be doing in this situation?
Right.
And I think short term is we should be hedging with oil and natural gas because those prices could, go up. Yeah. Then what's the other area that we should be looking at?
I mean, we love tech stocks. We really feel that technology is here to stay. It's the future as well as the present for that matter. And right now, we have seen a huge pullback in that area. And as well as healthcare. These are essentially on sale, if you will. These are great areas that we think will continue to be strong and will come back quickly once we get to the end of this downturn. So it's a great opportunity to, if you have cash sitting on the sidelines, to purchase some of these great companies.
Well, and if you don't have cash, you're still taking advantage of the situation. A lot of we prefer active management versus passive management, and this is why we prefer active management. So what's happening right now is the managers of your funds and ETFs are buying these great companies that are on sale that are going to be the big drivers as we come out of this situation. And something else we should talk about, if you look at every major war in the past, the market takes a hit in anticipation of the war happening, and then the day to buy is really the day that the war begins. So that's happened, and we saw immediately the market was up on the day of the war, and it was up on Friday, which was the largest increase in for the 2022 was the second day after the war. It's not over. There's a lot more upside for our investors.
For sure.
But if you do have money on the sidelines, we do think now is a good time to be adding money into these great companies at a discount.
I think there's one more thing, Doug. What about the Fed raising rates? I mean, that's something that obviously has been on the mind of investors this year and has been sort of creating some uncertainty in the markets even before the Russia-Ukraine situation. How do you think the Russia-Ukraine situation might impact their raising of rates?
Well, and you're correct. Our downside in November and in January, a good part of that was anticipation of increase in interest rates. And I do think they're still going to increase interest rates, but I don't think we're going to see as many increases as they were forecasting. It's going to be very difficult with the federal government having to spend money towards supporting the Ukraine government, and then increasing interest rates. You don't want the economy to go down during the time of emergency like we're at now. And the other thing we should talk about, even though we're going through short-term some volatility, we still think the market's going to be up 8 to 12% for 2022. It's not going to be as good as 2020 or 2021.
Those are hard years to beat.
They're hard years to beat, but we still think it's going to be a good year and for stock investors, not so much for bond investors. And you definitely don't want to own cash in a time of inflation or war. So,
as always, please reach out to us if you have questions or concerns. We are here for you, and we are ready to talk to you about these issues.